everyone. It's Chris from solstice.xlatrai. You can find us on X as well as both websites. Remember, we are not a broker-dealer. Our past performance doesn't give us any indication of our future results. Use at your own risk. And the data, if you need to copy it, please request it from our website or get in contact with us at solstice.xlatrai. This is the website to help regular retail customers not to trade alone when they first start. They need to learn what the overall market is, understand the risk, the micros, the fundamentals, then the technicals. Fundamentals are usually for understanding a company or an electronically traded fund, part of the S&P 500, the NASDAQ, or the small cap Russell, in order to position yourself in a regular trade. If you swing trade electronically traded funds, equities, which you can pick from those electronically traded funds, or commodities, and remember, or currencies or Bitcoin. We're here to help you understand the market, understand the levels, and we do live trading every day on Discord. The second website is for institutional, whether they are domestic or international in the global markets. This is our disclosures under XLATRAI. We're here to help you understand market volatility, how to raise money, and do different projects. And last but not least, you can find us on the on YouTube channel under Ceasefire 6177. These weekly videos, most people don't know we are there. Subscribe. It's the weekly video for free for everyone. Give us your commentary. Let us know what you like and what you don't like in order to help you understand the risk. I know it may sound a little bit gibberish at the beginning, but you need to learn if you want to become a better trader to understand the overall market risk. Second, I wanted to show you here on X my commentary in the morning pre-market, which I said here on the 9th. I'm going to show you here on the 9th. This was good morning. The overnight inventory is inside yesterday's range, looking for partial gap fill. In the S&P and NASDAQ, while the Russell was a little bit weaker compared to the Dow, and I said we're going to pay attention to the tech sector, New York Composite, the semiconductor, and the financial sector, XLP consumer products, versus the dollar, the VIX, which is the fear and greed gauge move, the interest rate, TNX, HYG, and the short-term ZF instead of the ZN. This is the 5-year notes, not the 10-year. And I said, pay attention to Amazon because it is setting up to go higher. And here is my timestamp on it. I'm going to open it up, show you the timestamp, 6:20. The timestamp on Amazon, when I called it, it was at 6:20 a.m. Californian time. East Coast is 9:21 before the market opens, and this was on X. So if you can look, and I said, pay attention to Amazon, and I'm going to open this one up, and I'm going to show you the timestamp at 9:01 before after the gap fill. Here is that Amazon right here. I'm going to show you the target because it was moving fast. The midpoint was 224. The high target was actually 229.67. The average true range was 641, which is $6. Let's call it 50. And the 2.5 standard deviation, you take 6, multiply it by 2 or 2.5, you'll get $16 some change. So the move was in the gap. I said pay attention to the 223.35 and the 226.35 in case we get a breakout and fill partial gap. That was F5, which is the 50%. F6 is a 61, and we filled the gap, and I'm going to show it to you right here. This is the announcement, correct? And here's the gap fill on the charts on the NASDAQ 100. Remember, we're here to assist you, get you to understand the levels without being biased. And once again, at solstice.xlatrai. And here's the Discord announcement on our end on Discord. This is the morning because I usually do the announcement in the morning in pre-market. And these are the same commentary that you can see on the charts in the range. I was telling where the range is in the S&P 500, the Russell, and the Dow. I'm going to just show one of them. Here's the S&P 500. I'm going to open it up so everyone can see it. You can see where the midpoint is, 6,807.75. That's the S&P 500. The low target was 67. If the momentum was down, and the high target was 6,900. Average true range on the S&P, it doesn't matter what instrument. You take the 122, call it 120, divide it by 2. That's 60 points up, 60 points down. If it's 2.5 standard deviation, it's 310 points. Let's call it 300. Divide it by 2, you'll get 150 up, 150 down, and the volume weighted average was at 68.05 on the charts on the S&P 500. So let's X that out of there. That's the Discord channel. This is the Amazon announcement. You can see it at 6:14 a.m. I like Amazon, and I will show you the exit on Amazon right here. This was the announcement. The night of is on 7:01, and I said pay attention to it inside the group. There it is. You can see the 624 and the 626.35. You can see the target shifted to 229.67. Average true range was 671 and 16. The daily, on the daily, it was up. It was a little bit under. The monthly was up. Weekly was up. The 4-day was sideways. The 3-day and the 2-day were up. But there was a setup on it in case it broke out through that 226.35. It came tested the 230, 223.35.50 area, and I called the 60 cents to go long. We took it all the way up to 232 in the charts in the group, and here's the gap fill. I wanted to show it. This is actually Brian who dares. I was showing the S&P. This is part of the Russell 2000. Here, the Middle East and Lebanon, all airlines were stopped flying that day because due to between Israel and Hezbollah over there, they're getting bombarded. And you can see here the push down to the 223.35. We took the 60 cents to fill the gap, and you can see the 232 was the up target on the gap fill. So I hope this is kind of giving you a little, you can see the ATR shifted to $7.23, and the Hobo 2.5 standard deviation is 18 divided by 2. That's $9. If you take the 223.50 to the 232, you got that $9 range up in Amazon. I hope this is helping you. So we're going to go next to the Thinkorswim platform. On the Thinkorswim platform, I have the New York Composite. You can see it up here. I put it on the daily. You can see that consolidation here. You can see the times. This is the 2025. I just went 1 year back. I'm going to bring it in, zoom it in. This was the consolidation. It created a W. We got that gap down. We missed that gap here on the run up in November, December, and ran up, made a high. January came 50% of the move, or the backside of this consolidation where the breakout happened every time we went up. We rallied up. We double top between the January and February. We fell down. This was a double bottom. It filled this gap. I'm going to use that gap in an oval platform. Show you how to look at it. This gap was basically filled. You can see it here. Between here and here. So we filled it, no longer valid. So it filled the gap, double bottomed, and rallied up from the low to the high for the year in 2026. You can see the Fibonacci 0 support. Resistance is 100%, 50%. You got a 78% here in a 23. Once we cleared the 23 and the 38 off to the races, we touched the 60, the 61.8, missed the 78, and came back in a little bit. This is the annual chart from the prior year. You can see the 100%, the 114 and the 123 extension to the upside. We tested the 123 and we got rejection. We fell back down below the 0 line, came back almost to it. That's the 78%. If you push it up, that's your 80%. We never came all the way to the 80% and reversed back up. So we got to pay attention to the directional momentum indicator when it gets slammed on the floor. That's the positive one. When it goes below 10, coming back through 10, 15 and climbing up, and the directional momentum indicator is in red. When it gets above the 40, 45 to 50, 60 and starts to cross the advanced decline line on the ADX, will pick up the direction of the momentum of the plus and negative in the direction of the move. When it's bearish, when the ADX picks up the DMI plus, and the crossings are confirmation of a change in trend, and the ADX will pick up the DMI plus in the direction of the move. If this is exhaustion, basically what we're going to look for, if there is exhaustion in the market, so we'll look to kind of set a small range down like this, fill the 50, come back up here and break out. That's a like a cup and handle. You can see it here forming because this is considered now support down here because this was the breakout, but there's a little bit of supply in this area. So what we can do, I want to show you how to do the supply. You can get a box in this area, box it out and put it right here in case you clear this area. And let's say it breaks up, it goes up this way. Hold on, let's go get the lines so you can understand them. These I do have. You can, let's say it breaks up this way, goes up to the backside of this channel, comes back down this way, and eventually breaks up. Then you look for the upside. Either way, you're going to trade the directional momentum indicator and the RSI. RSI usually gets slammed to 15 at the bottom and 85 to the top. You can see I have the 23% and the 78%. I use them like a Fibonacci, and I have the 61.8 and the 38. The 50 is the midpoint on the RSI. I do have an average here. When the average crosses from the top, it's bullish. When the average crosses or bounces off the average of the RSI and the 38 and the 50%, then the 61, it gets to the 78 or 70%. It starts to get exhausted. Coming back into the 61 and bouncing back up is great. So I use these two instruments to give you an overall view what the market can do for you. And this is why I put the NYA. We're going to put right now the SMH, the semiconductor, the SMH. I want to show you the SMH. We can see that there is a large breakout in the SMH when it came back to this area. There's this gap, this professional gap. It does not have to fill the gap. You can see it. It's right here. We rallied up, came back, retested this consolidation where the breakout happened, rallied high, double top, looked above it, fell back in, came back to the consolidation in this area that's considered support now. And this one here, the rally, came back to retest the breakout of these two areas. There was a little tiny gap here. We filled it here and we filled it here, rallied up, made three tops, fell back down, retested this area, rallied high. You can see last year's high is the 100% here. We came back on the way down, consolidated. This is considered now support. If the semiconductor going to continue, you're going to look at the different sectors in the semiconductor and the technology to find support and resistance in the breakouts. So I'm going to zoom in here to show you how to look at it. This was last week's range. This is the Friday look up, come back in. We got this little gap. I left it there. We can move it out, remove it, and I will show you where the support is. We're going to get a box. This area here between this consolidation here in here, I would consider this is support because coming back to this area, I'm not going to use that wick up the top. I'm going to use this area here. Even if I come back down to here, even if I don't fill that partial gap at all, there's a gap here. I'm going to show you where the gap is. And there's another gap between here and this candle here. I'm going to mark it this way so you can see where the gaps are in relationship to the support. And I can change the support to show you what, support and resistance. We can show it in a different color, and I can make it purple so you can recognize where the supply and demand is and the breakouts are. Even if I come back down and continue up, that would be great. But the directional momentum indicator is picking itself up, and you can see it's above 40 and the RSI is getting to the 75. Once it gets in the 78 to 80, 85, it gets a little exhaustion, comes back in a little bit to find support and resistance, and we buy it back again. That's in the SMH. Let's take a look at the XLK in the tech sector. You can see in the XLK, we had this area, what was considered, support. We broke up, came back, retested that area here, rallied up, couldn't make the high. We kind of created supply in this area. Then we fell down and created more supply on that side. We fell down to that bottom area, rallied up, and we got this gap. If I take the high for the month and the low, this is my Fibonacci measured moves from the prior month. And you can see the machine grabbed the support and resistance to this area. It didn't grab here, which gave you the 2-week range. But on weekly basis, what I do, I look at the weekly ranges for the measured moves. So I'll go over that with one of the charts so that way you can use it. This is right now is considered a lot of support here. If we come back, find a partial gap in this area and continue, that would be great. But if we get a breakout and break out of that supply area here and creates the demand and you get a breakout, you look for the upside. And the directional momentum indicator, you can see, started to pick itself up, and the DMI plus picked itself from the 10 to the 15 and rallied up, but the DMI negative, touched the 40, falling back in. Now we got to pay attention to the advanced decline line if it's going to pick up the DMI plus to keep the direction momentum up, or it's going to go back and give a relief back to the DMI negative, coming back towards the 40, and the DMI negative plus comes back to the 2025 and bounces back up. So this is how you use the directional momentum indicator with the RSI or the MACD or the stochastic in order to help you understand the levels with the Fibonacci's and the measured move. Let's take a look at the IWM. I'm going to show you the IWF, which is the large cap growth in the Russell 1000. You can see it's a little bit more weaker. When it came back, retested this breakout. You see it? This was the gap fill, which it filled, but this one from here to here, that's a tiny little brush which it missed. It doesn't have to fill it. It's starting to move, but we are still in that down move. If you look at it, let's do this. And if I just draw a downtrend channel from the peak here to this valley or to this one or to this one, you can see where my level. I'm going to extend it to the right, edit the property, extend it to the right, push OK. Oh, I didn't do it. Hold on. Edit. I did it wrong. Right on the left side, extend, allow extension. Allow right extension on, push OK. And you can see where the extension is to the bottom. And even if I do the same thing here, we are in that downtrend channel. You can see it. Or even if I grab the one at the bottom down here, which is in this area instead of the one up here, you can see we're still in that downtrend channel, coming back to that pitchfork or the Fibonacci. You can use a fan. I'll show you how to use a fan. I can take this bottom here to this one here, which will show you that. Or even if I use this one down here from the top to the high, there's going to be some kind of resistance up here coming back up. And if I fall back to the backside of the F3, which is the 38.2, that would be great too on the small cap Russell 1000. Let's take a look at the IWM. I'll show you the value one, the N, the Russell 2000 value. It's a little bit different than the gross. You can see it came back to that consolidation where the breakout happened. That was last year's level on the 100%. This is actually a little bit off. So I did not measure the annual on it. You can see where the high was last year. We came back, retested the breakout of this consolidation here, rallied up, created a head and shoulder, fell back down, came back to that consolidation and the breakout, which is considered now support. If we can get this box here or an oval, you can see where the support is on the charts. We came back to this area, bounced off it nicely, retested it a little higher high and continued up. But we do have this gap in case we find resistance. Do we fill partial? Because this is considered supply. If we fall back in this range and find support or halfway in and continue up, that would be great on the IWM. Let's take a look at the IWM. I do have everything on it, but I will show you how to do this on the NASDAQ. You can see this is my monthly high, my monthly low for the prior month. You can see support and resistance. The machine grabbed the last 2 weeks, and I have the weekly measured move on it. So if I go from here on the daily to a 78-minute, you're going to see volume weighted average. You can see that the volume weighted average, I go back 10 days usually to show the anchoring, where the high is, where the low is. It's a anchored VWAP 2 line. You can get it from TOS. It's for free for everyone. This is something basic. And your VWAP, which would be the middle. And I do the last 5 days on the range. You can see I take the Sunday through Friday. This is the weekly range for the anchored VWAPs, and I changed the colors a little bit, and the daily VWAP would be a little bit more different in the coloring. And if I take the highs and lows, you can see my resistance is here, my support is here, and this is my anchored measured move on the Russell, whether the momentum is to the downside or the momentum is to the upside. Let's go back on the daily time frame, daily 1 year, push OK. And what I'm going to do here, go to the Magnificent 7. You can look at Mag 7, or you can look at the ones I have together, which is Apple, Amazon, Google, Alphabet, Google, Meta, Microsoft, which is Facebook, Microsoft, NVDA, Netflix, and Tesla. Netflix was doing well, and Amazon. We had called it, and you can see here how I did the measurements on the weekly, which I'm going to show you how to do. We're going to get rid of those colors again. I'm going to remove them. And you can see the pattern I did. I was just helping a friend. He asked me about it, and I left them on the charts on the Magnificent 7, including Netflix. You can see that this is considered a little bit of supply. There's overhead supply here. We rallied up, came back down. This is now an overhead supply in this area. In this area, in order to clear it, you have to run up to that channel. You can see I put the channel up, coming back, bouncing up, and continuing. Or do we fall back? Whether we fall the gap or not, come back to F3 and rally back up. That would be great. It doesn't matter which way it is, but you got to look at the directional momentum indicator and the RSI or the MACD in order to give you a little bit more hands on the charts. I will show you here Netflix, that it was nicely setting up, nflx. On Friday, it held very well. You can see Netflix, I have a cone on it, and you can see that there's a gap up here, professional gap on that move down after the earning and the split 10-1. They brought it all the way down here. We have this gap here, which does not have to fill. If there's going to be continuation, you can see that move up, rounded bottom, created a rounded bottom. Does it do another round, or does it look up and clear the 50 cone on the fib in order to continue to fill that gap up here and come back to this area? So I am paying attention to it because it looks like it's strong. The directional momentum indicator, the DMI plot, got picked up by the ADX. If there's going to be continuation, pay attention to the DMI plus. If it falls in and the DMI negative picks up, wait for the reset before jumping in on the wagon on Netflix. And here's Amazon, AMZN. And you can see Amazon here after this large consolidation. I had these areas of consolidation and the gap when it came back in. I'm just going to move in here to show you that this gap was filled, continued on Friday a little higher and came back in. So this is considered a little bit of a up here supply until you clear it. Even coming back down here and going back up would be a good thing to pay attention to. The DMI plus, you can see it's at 49. The DMI negative is almost reaching the 20. If I put my mouse on it, you can see it's showing you 19.26, and the RSI is getting a little bit overextended above the 78 to 80%. So even coming back down a little bit and bouncing back would be great. So last but not least, let's take a look at the micro ES. Micro ES, which is the S&P 500. It's taking its spare time, huh? Is tossed out? Okay, there we go. This is the S&P 500. You can see I put here the levels, and we can see we were in the downtrend and we started to rally up when we got that tweet from Trump that the ceasefire in Iran and the U.S. in this negotiation to see if they can open up the oil, in order to get it to run through that hub. If not, and things do turn worse, I wanted to show these levels. We are coming to that supply area where we failed from. If this is considered supply in this area up above, we're going to mark it with a box instead of an oval. I'm going to use this area here. We'll use this one here all the way to here. I'm not going to use the peaks of those area because I want to show this consolidation for a while. We looked down, rallied, looked down, rallied, looked down, rallied, couldn't make the top, and we kind of created a downtrend channel. If I do get a downtrend channel down here, I want to show it to everyone. You can see where that level is, and coming down this way, you can see that we have not cleared it yet. Even if we create a rounded bottom and continue, that would be great. And if we get a breakout, that's much better. But remember, do not chase unless you know what you are doing, because you had a star, you looked up and came back. The wick is a little bit higher than the low, and I will show you the monkey bars in order to help you out. You can go from candles. It says monkey bars are a volume profile that I use a 10-day 30-minute in order to see where the support and resistance. I'm going to zoom in this area. You can see on that tweet that push higher, but we're going to come to this area. We set the other ones on the back. This is the value high and there's a shadow, a value area low. This is where most volume happened in that area. And the point of control is where most contracts were bought and sold on the S&P 500. And you can see that move up created a P formation. And this is the time spent, where the time spent high, low, and where most in the 24 hours between the Asian market, European, Middle East, as well as US, South America and Canada. This is where most of the time was spent. So if you look here on Thursday, we had two different distribution because we looked down and we rallied back up on the news in a report for employment, the CPI, and so on. We have this little gap up here. This is considered one distribution. This is considered a secondary distribution because we did not fill 100% of that gap. I just want to come down here. These are single prints. Usually you want to come in. You can see where the low is here of that chart. It's around the 68. 46 and a quarter. In order to fill it all the way down, you can come all the way down to 68, 29, 75. So this area is a void. In case if we end up falling, I am paying attention to that single print in order to find where the value high is, value low is, and the point of control. Coming back to this area where there's more volume, it may find support here and bounce, but if there's continuation, keep that in mind on the charts with the prior day's gap up, professional gap from the Trump tweet from here to here, because you can see where the highs were on that day. You can, if I put my mouse here, you can see it shows 66, 73, 75 all the way up to this area here. If I put my mouse here, I will show you it's 67, 79, 50. So this will help you understand the levels. And on the monthly, I will go to the monthly. On the daily chart, I'm going to show you the monthly chart. I go usually 3 months. You can use the annual for 2 years to see where the levels are. Whenever the value area high, value area low, and the point of control retested, I move my anchoring to the new month, which is the March month. This is the 20, and this is the April. It's still forming. We are going back and forth. We have already tested the point of control. We tested the value area high as well as the value area low, and we rallied back up. We closed right here. Does there be continuation above value area high or below? We got to pay attention to these levels without being biased. If there's going to be continuation coming back to the prior month value area high or not, because you can see in March when we fell through, we never retested the value area high from the prior months or the time spent high. If there's going to be continuation, I am looking for that 7,003 area in case we continue up and we get a reset, or do we fall back in the range to this area here where there's a void in the volume and the point of control to get a bounce back up. This is why I use the volume profile on the monthly as well as this daily. Whenever I have a VPOC like here, you can see I have a VPOC that's never been retested. I usually mark it with a line, and I'll show you on the daily, we mark them with purple lines. So that way the point of control is marked like here. It was retested back and forth. The last one is up here. That's another VPOC that's never been retested. So you have a VPOC volume point of control where most volume happened, as I call it, VPOC virgin control point, which never been retested. That's beneath us. And there's another one here. If I go back in history and look at the highs, we do have more at the highs, but I don't want to go through them. But this is how you mark your levels in order to trade inside the range, above the range, or below the range. I know it's a little bit boring. It's kind of giving you a lot of information, but this will help you in your trading so you don't end up being biased. And last but not least, I'll show you the micro NQ. And you can see in the micro NQ, I did these level. This is where most of the volume and supply that was considered supply became support, rallied up. This is supply up here right now. I should make a double, duplicate this. Watch, we're going to duplicate it instead of doing it, and I'm going to move it to this area. That's considered a little bit of supply up here. I'm not going to anchor it all the way up, but once I get to that double top that we had here and we rally through it, then I'm looking for the previous lower high here to be created on the push up. And you can see my weekly range for the week was from Sunday through Friday, high and low. My extensions to the top is 200%. My extensions to the bottom is minus 100% from the zero line, even coming back to the backside of F3 or partial gap between F3 and F6 in order to continue higher. And if this happens, pay attention because you got that nice breakout out. And even if I draw a downtrend channel, I can show you that this downtrend channel, I'm going to duplicate it to show you duplicate drawing. I'm going to move that duplication. Watch what I'm going to do. I'm going to move this from here to here and this one to here. And I wanted to show you that we are in somehow, if I get this line here and I move it, I'm going to activate it. Okay. Right click, activate. Watch what I'm going to do. I'm going to put this here, grab this down here so it anchors itself, and you can see that linear regression channel is these two. I do have a sharper one here, but you can see that it's creating that downtrend. But in case if it doesn't continue, we look for the upside. If it comes back in this area, it's a nice where the support is. That's considered supply. That was now becomes support. If it finds support here and bounces and creates that rounded bottom, that would be great. But if you get a breakout, it's a freight train running up, runaway train. So this is what will end up happening on the weekly chart. I hope this video was very helpful. If you have questions, once again, check us out at solstice.xl, ATRAI, or on X. Usually my tweets are once a day to help you out. Take care. Over and out.